Hello and welcome to another update video about ADA. Yeah, the ADA chart is giving us currently this B-wave rally that we wanted to see in the last update yesterday. If you watched the last video, then you will know that we've been watching for a reaction to the upside. I highlighted to you that a B-wave corrective rally should be close. I think we see that right now. We are seeing a little bit of a recovery today. I mean, 8% is quite noteworthy, at least here as per TradingView. If we really consider the movement of the lows, we're talking about 16-17%. The price turned around in our support area where it actually needed to, even though this is just a micro support area that was originally intended to tell us if the market can still extend higher in the third wave, which, to be honest, it could still do. So it's entirely possible that this third wave is still in the making. Is that what I primarily look for? No, but it would be an alternative. So there's a primary scenario and an alternative. In the primary scenario, we also expected a reaction to the support area, but it's just a B-wave rally, basically a corrective rally, with a standard retracement or resistance zone between 57.5 cents and 61.5. Okay, that's what I highlighted to you, I think yesterday, but I didn't leave it on the chart because, to be honest, this is not really a target area. It's more like a standard resistance zone. You would still often see a B-wave react to it, but B-waves more than other waves would go beyond these and can still be valid. That's the difference. If, for example, a wave 4 goes beyond resistance, I wouldn't necessarily count it and see it anymore as a wave 4. If a wave 2 goes beyond resistance, I will also consider other options. With a B wave, it takes a long time before I consider other options because the B wave can overshoot, okay? It can basically create a fake out rally. It could easily be that it looks like an extension of the third wave still, possibly to 69 or even 75 cents, but it actually is a B wave. By the way, apologies for the background noise if there is any today. Yeah, I can't do anything about that today. So from there, however, anywhere here now, we can watch for a move to the downside in the C wave, in the primary scenario, into our larger support area, which is here between 43.8 and 34.5 cents. However, I cannot promise you that this will happen from here because, as I said, B waves can extend. And to be honest, that B wave itself looks somewhat incomplete. Could still get another high maybe. Yeah. For example, this could easily be WXY structure, then it's basically finished. If it's an ABC, it basically needs another high or it would look better with another high. There is also not only Fibonacci resistance at 61.5 cents, it's also structural resistance. You see, this was a previous high and also one of our target Fibonacci levels that I made you aware of, and that target was reached basically. Okay, so yeah, and that's the alternative. Well, that's the primary scenario. In the alternative, you could say that we are still in a third wave, basically that this third wave here never finished of this larger diagonal pattern that we've been tracking over several weeks now. And in this diagonal pattern before the wave 4 begins, it is entirely possible that this third wave still extends with the next target. I mean, the yellow box is still showing you the Fibonacci extension targets for that C wave within wave 3. And then targets are 69.3 cents, 74.5 and 84 cents even. There would be quite a lot of an extension basically. But yeah, you know, just assuming we might see a high B wave, which to be honest, we always have to expect, especially if the A wave to the downside is just a 3-wave move. Then if we measure the retracements and we look at the 1.38 retracement level, that's sort of theoretically, you could say, the maximum an overshooting B wave would do. But it's only theoretically, yeah, the maximum. It's not, in practice, I've seen B waves that did overshoot further. Also, it's all about a sustained break. So what, for example, happened on the Solana chart, the 1.38 retracement was breached by, I don't know, 1 or 2%, but it was not a sustained break, okay? So just be aware of that. It can still extend further and maybe retrace or go back below it within the same day or so. And it's not an absolute rule anyway, it's a guideline. So I would not rule out, for example, if the B wave extends to $75, but gets rejected strongly, it would still potentially be a B wave. It would literally depend on the structure. But yeah, what can I say? This is currently the structure unfolding as intended. We had our dip into support. We had the expected corrective rally, and it doesn't necessarily look finished yet. If we get a break below the last swing low, which is here at 52.4 cents, then it seems likely that the wave C of 4 is actually unfolding. So I keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.